this video, I would like to talk about how I view the market structure, and this can be considered on a higher time frame perspective and also on a lower time frame perspective. So I will start using some lines to explain how I view the market structure. And in this case, we have a bullish trend, right? Made with higher highs and higher lows. And the main point about the structure for me is the previous low before the new break of structure, meaning before the formation of a new higher high in this case, or lower low in a bearish trend, right? So what I usually do is I literally have a box on that low. Why? Because if that low gets broken, I can consider shorts if the price also gives me a confirmation. What I mean by this is, so let's assume that the price does this and closes below this level, right? Whenever the price does this, for me, it is not a confirmation of a change of market structure, meaning that from bullish we turn bearish. For me, this can easily be considered as a manipulation of the low and a continuation, to the upside. Therefore, what I consider as a true market structure, a change of market structure into a bearish one, is also this. This is a confirmation for me, meaning that low that gets manipulated, that low, that new low that gets created, it is yes, a lower low, but it is not a confirmation that structure, that bullish structure, has been broken. Because the thing is, once this previous low gets taken, again, the price can easily go to the upside. But most of the times, if there is the creation of a new lower low, then in that case, usually most of the times the price switches to completely bearish. So whenever the price creates this first low, I do not consider the market structure as bearish yet, but I do consider shorts opportunities. Why? Because this low has been broken. Therefore, I may anticipate the formation of a new potential lower low. Therefore, I consider this new low as a let's say I consider the main structure, the main market structure, as again the main market structure, and this new structure I consider as the fresh market structure. What this means for me is that with the fresh one, I do not have the confirmation yet of the switch to the new market structure, but given that I have the fresh market structure giving me the confirmation to potentially start to look for short opportunities, I may consider that high also as the main high to be broken for a continuation of the bullish trend, right? So therefore, most of the times what I usually do is I have two boxes, one of the fresh structure and the other one of the main structure, and I usually consider them like this, right, in this case. So therefore, in this example, I like to consider either short position and also long positions. So yeah, this is how I consider market structure. I usually use this concept, let's call it, from the higher time frames, especially from mainly the 4 hour, to give me the bias for the day. And this can be used on every asset and every time frame, and you can adapt it to your view of the market. And yeah, I'm gonna show you some examples with the candles right now. So we can take this as an example, right? So we see the price switching from bearish to bullish on the 4-hour time frame, right? So here we have the high, the key high, that if broken, it will I will start to look for long position, right? Therefore, the price here, so the price here breaks it, right? Then creates a lower and higher low, and then creates a higher high. In this case, I will consider the low before that new higher high as the new as my new key low in this case. That if it will get taken, and if the price will close below it, I will start to look for short positions, even if I don't have the confirmation yet, meaning price closing below, and then creating a lower high and creating a lower low, right? That is the confirmation for me. But in this case, we have the opposite, which is the price creating a higher high, closing above this level right here, and creating a higher low, right? But so therefore, in this occasion, this will be the low that I consider as my main point, that if the price will break it or will close below it, I will start to look for short position from my fresh structure only, right? And I will at the same time also look for long position with the main structure, because I still do not have the confirmation of the new bearish market structure, right? So in this case, the price with this candle, it closes below the low, so therefore I will move my box of the fresh structure there, just to to keep that in mind. And at the same time, I will look for short position and long position, right? Also take a look at the time. So here, this candle will closes at around the open of the NY session, meaning most of the times when this occurs, we have New York reversals, which most of the times are very high probabilities. It depends on a lot of things, but this is just to give you some examples. And in this case, what do we have? A huge NY reversal. And again, this is just an example, and we could use a lot of example, but this is just again to give you just an example of what I consider as the market structure. I mainly use this on the 4-hour time frames, but you can adapt this perspective on every time frame, or the time frame that you wish to use. So this is everything regarding how I consider market structure. I hope you enjoyed this video and learned something new. Let me know down in the comment if you would like to learn more about this different kind of point of views regarding how I see the markets. And I see you on the next one.